This video is being recorded at 10:57 p.m. Pacific Time on Tuesday, August 16th. This is just a quick update on the last two trades that I posted. I had since closed them shortly after the previous video where I showed the opening positions, and I also took a third trade on Euro USD as a second attempt to sell a breakout, but that did not end up being a profitable trade. So yeah, here are the trades I've taken so far on the second FTMO challenge attempt in August. So these were the two trades I previously took. I closed them let's see, at 9:46 p.m. yesterday, and Euro USD at 6:41 p.m. yesterday. So this was the second attempt to trade the Euro USD that I mentioned. I took this sell just after the London Open at 12:21 a.m. Today. I took 47 pips of risk on this one, which was about 8 lots total. And I got out about half an hour later at 1:03 a.m. With a loss of 21 pips for a drawdown of just below 1%. The previous two trades I took, I profited over 2% on the first one and lost about 0.5% on the second one. So I already did a little bit of a review. These first two trades were good trades by my standards. I observed the right confirmations and I was trading with the right mindset. But this third one was not such a good trade after thinking about it. I did see some confirmations, but due to my psychology at the time, I think I could have performed better on this third Euro USD trade, and I'll talk a little bit more about it as I show you the charts here. So quickly checking on Euro Swiss franc, this is what the 1 hour chart looks like right now. So yesterday at the end of the Tokyo session, at the beginning of the London session, was when this breakout stopped and started to retrace. So today's New York Open, there was a lot of buying, and now it's retracing a bit around the 0.966 level. So stepping back a bit, here is the daily chart. As you can see, the breakout happened, but now we are retracing, and the Ichimoku indicator shows flatness in all the time frames. Here's the 4-hour chart. So we have retraced back to the 4-hour chart Kijun-sen, tested it, and now it looks like it is going to break that level. We actually tested it once, twice, and this is the third time, which if it closes like this in another 3 hours, it's probably going to break or will break soon. So let me talk about why I decided to exit right here. So I was looking at the 1 hour chart. So the price action slowed down considerably around August 15th. You can see the candle bodies are getting smaller, and there are a lot of dojis inside this trend here. It was kind of similar to the setup on the previous day, where you can see this smooth arc slowing down, this kind of parabolic smooth arc slowing downwards. So I drew kind of a trend line resistance that was going down, and I did see it start to break around 6 o'clock or 7 o'clock my time. 7 o'clock was when it closed. This candle closed above the trend line I was looking at. However, the 4 hour was still angling slightly downwards, even on this candle. So if I do the replay, you'll see that it is still barely pointing downwards, but flattening out here. So I actually took this exit on price action confirmations alone, not necessarily looking at my indicator, since it is a bit lagging, and then you can see this 4-hour candle completely flattened out after a few hours here. So yeah, looking at the 5-minute chart, where was my exit? My exit was here. So yeah, I thought it was looking like it would sell off at the beginning of the Tokyo session. So we had this breakout here, and then followed by another breakout. However, it retraced all the way back in the next half an hour or so. So this was when I started looking more for a chance to exit my trade. So we had this long wick here, and I think by the time I saw this candle form at 1830, I moved my stop loss down to 0.96192, just the previous high, to account for the spread difference. So if I did get a decisive breakout, like let's say this candle closed all the way above here, then I would for sure know a reversal was happening, and I could exit. So I was actually away from the charts from, I think, this candle to all the way to somewhere back here. But as you can see, we had almost a higher high at 1955. That didn't exactly quite happen. The market consolidated a bit, and then at 2140, this candle was the one that triggered my stop loss, and I exited the trade. The reason it triggered, even though it didn't cross, was, as I mentioned, because of the spread. I think the bid or the ask had passed this point, so this is really only 1 or 2 pips here, I think. Yeah, it's just a little less than 2 pips. So ended up exiting here, and then yeah, the market just started going up on the London session here. So in total, if you measure from my entry to my exit, that was exactly 35 pips of profit. So yeah, this was a good trade. I was patient enough to get in at the beginning, rushing, but not rushing, but just monitoring. And then I clearly set the stop loss on the way out. So yeah, let's take a look at Euro USD. I believe up until yesterday, this chart had a similar setup to Euro Swiss franc. So yeah, as I mentioned, this was the first trade that I took, these first pair of green and red vertical lines here. So I thought there was going to be a breakout on the 1-hour chart. So here it was, the Kijun-sen was angling down, and then I exited that trade based on the 5-minute chart because I did not see further breakout confirmations. So I entered right at the candle right here at 1740, right after it reversed, and then it looked like it was going to go down. So this is usually when I see if it reverses high and then comes back to the previous low. If it doesn't break out, there's a good chance it's not going to. So after I saw it go back up and then stay in this range in a while, I just chose to exit manually because yeah, this looks like a flat trend to me on the 5-minute chart. So for the rest of the Tokyo session, the market retraced a bit further, didn't really have any direction, and then the London Open was when the next breakout looked like it was going to happen. So this is the second attempt I took to sell this pair yesterday, or at the very beginning of today. And the reason why I say my psychology was not in place was because, yeah, I was kind of rushing to capture this trend. I felt like my previous first two trades on Euro Swiss franc and Euro USD, they were going quite well. So maybe I was a bit overconfident and thinking the market would continue to trend as it had been. So yeah, the exact way I was thinking was I saw these three large bearish candles break down, and I was looking for some kind of a retracement, but maybe I was not patient enough. So I saw this bullish candle form, and afterwards this engulfing bearish candle. So as you remember what I was talking about, if it completely engulfs, there could be a strong chance that further selling would continue, as the buyers are not willing to buy this current forming 5-minute candle to keep the price the same or push it upwards. So I entered right at the opening of the 20-minute candle here, 1220 candle. So yeah, I think my price was somewhere around here due to the spread. I think it was at the very bottom, but then the market started retracing right away. These kinds of straight up retracements are the hardest for me to exit, because if you don't look at the lower time frames, like on the 2-minute or 1-minute chart, it's not very clear where the market renews its high or posts a newer low. So you kind of have to look at each individual candle very closely, because inside each of these candles is where you will see the little N waves forming. So if we're just looking at the 5-minute chart here, you can see it went up, went down for one candle, which is 5 minutes, and it started going up again, and then for one candle it went down and then actually got bought back to the same price within 5 minutes. So this one candle is actually your retracement. So even if you don't see a bearish bodied candle, you still have to recognize this is a retracement on the shorter time frame before renewing the high. Yeah, so unless you're watching very closely, ready to get out of the trade, it's very hard for you. Like, anyone can see if it passes the previous high, like right here, but it's not so easy to see it passing the most recent highs made on these retracements here. So if I show you the 2-minute time frame, it'll probably be more clear. So this is the 2-minute chart of the same retracement. As you can see, it found a bottom here, broke the previous high, retraced, and then broke the previous high again at 44 minutes, went up, and these candles here, if you recall, formed the doji on the 5-minute chart. So yeah, it went down, formed a wick, and then renewed the previous high at 54 minutes, and then it went up all the way to the high here. So I think I took a total of 21 pips of loss on this trade. I remember, yeah, getting out at pretty much the previous high, and yeah, I was feeling kind of tired at this point, and I was willing just to take a loss on this trade and go to bed. So this is the other thing. If I wasn't tired and I was willing to watch the chart more, I probably would have waited to see if the market would interact with the previous high before the breakout there to get out at a better price, because even if it retraced to right here, the 0.101689 level, there's a good chance, you know, the very short time frame buyers are going to take profit and sell. So that could usually send the price down a considerable amount on the 5-minute chart, and I could have gotten out maybe with like 15 or 12 pips of loss instead if the price came down here. But I was not spending that time watching the markets here. So even though after I stopped watching the chart, the price went all the way back down and actually a little bit more past my entry level. I could have maybe gotten out with a break even in this trade, but again, I wasn't equipped at the time, both mentally and time-wise, to watch this market. So yeah, even though I didn't lose a whole lot in terms of drawdown, just on the record, I don't think this was a particularly good trade executed by me. And yeah, dollar-wise, this was almost $1,700. So I could have used that as another, drawdown for a better trade attempt. So yeah, right now we are sitting at just over 1,000, almost $1,600 of profit on this account. It doesn't look like much considering, the $4,000 of profit I got on the first trade. So yeah, it's very easy to eat up your profits with a lot of drawdown trades or losing trades or improperly executed trades. So that's something I'm trying to improve on right now. Yeah, making sure my profits run to cover my losses, and also making sure my losses don't eat up unnecessary capital. But yeah, just I'm 2 days into this newly started challenge period. Already executed 3 trades. I'm what is that, about 0.7% up on this account. So basically break even, but I have a few extra dollars, like another maybe half a trade's worth of extra dollars to risk. But yeah, on the overall markets, it looks like Monday started some of the continuation trends set up last week, but ever since then, the markets have been retracing. Yeah, I think all the euro pairs are retracing right now. Let me see. Euro CAD could break out in this next London session. Euro Swiss franc is retracing. Euro USD is it may break out, but it's not very clear at this moment. Let's see, pound USD similar, pound Swiss franc also similar to euro Swiss franc. Pound AUD has retraced all the way to the previous low level, so this could mark the high of the retracement. It's already interacted with the daily Kijun-sen a little bit. It got pushed down. So yeah, we'll have to see if the next few hours or couple of days, if this pair will continue to sell off. But yeah, this is the updates for today, and I'll keep monitoring the charts for the rest of this week.